great future. We're talking real money.
Jingle bells, jingle all the way. You know, that song was originally written for Thanksgiving?
I did not know that. This is Trivial Pursuit Part 2, brought to you by Talking Real Money.
Yeah, I am the guy with little stupid bits of trivia that run around in my brain. You are the guy with movie quotes that run around yours.
Well, no, I also have useless military facts I can recite, which my wife learned.
Useless military facts. I love those.
My wife learned last week that I actually do know them, and I'm right about them, because I quoted a fact about the USS Missouri, and then the person giving us the tour of the Missouri quoted and she's like, "You were just making that up all these years." I said, no. Actually, the Missouri could fire a projectile over 20 miles that has the weight of a Volkswagen Bug.
Dang.
Yeah. And I had told her that a long time ago, so we're on the tour, and she goes,
"That's a big honking shell."
I said, just one of those useless things I know.
Yeah. You know, I spent, while you were in Hawaii, I spent my little holiday, pre-holiday period watching a bloody World War I documentary. So
I know. I want to go see that.
I learned a little about
week.
war.
Yeah. That looks
amazing.
amazing.
It was really well done.
Yeah. I want to go see that.
Peter Jackson.
It's weird. One
Peter
more
Jackson.
day.
Yeah, they only do it because it's a documentary. It wasn't exactly a packed house.
No. Oh, okay.
But just so that everybody knows, we're not plugging this. We don't get anything for this. But Peter Jackson, the director of Lord of the Rings, was asked by the Brits to create a documentary from old war footage, just old war footage, no recreations, about World War I for the 100th anniversary of the armistice in 1918.
And it's astounding quality.
They actually took the film they used had a frame rate of between 7 and 15 frames per second.
Yeah.
They filled it in and turned it into 24 frames per second, then perfectly colorized it, and then turned it 3D.
This is not your Turner Classic movie colorization. I mean, it is phenomenal. Yeah.
They spent a lot of money on this, and it's...
What's it called again?
It's called They Shall Never Get Old. Or They Shall Never Get Old.
Yeah. Anyway, so that's one more shot.
They shall never grow old.
Never grow old.
And it's only playing the 27th.
Yeah. And I looked it up. It's only I think it's like one theater in the Seattle area.
I think it's only at AMC theaters. I think they're the only ones who are carrying
it. Anyway, so
I'm
going to try to sneak out to that on.
You should see it because my jaw dropped throughout the entire movie, and I went, "Oh my." I was not, you know World War II well. Mm-hmm. I know like the Civil War well, but I didn't know World War I.
It's just a lot of guys charging each other with machine guns that are mowing them down and throwing a little gas from time to time.
It was abysmal.
Yeah, it really was.
Anyway,
no war's good.
Hello. Yeah. I want to say hello to everyone out there listening. Thanks for being there. This is Talking Real Money, the show that tries to help you avoid stupid mistakes when it comes to money. And boy, this weekend we really need to help you out because we've had some troubles. We're going to talk about those in a minute. I want to give you our phone number because also this is the last show with a special Christmas bonus.
Oh, okay.
We're giving everyone who calls the show, ho, 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 a free copy of the brand new edition of Financial Physics if you call and ask a question on the air. This will be the last weekend we're going to do that. For a while, anyway.
Can you promise delivery before Christmas?
Not a chance.
Okay. I thought maybe you had the van you're going to drive around or something.
Unless you're going to drive them over.
I think you're going to see me doing very little driving in the next few days. That's my hope, but we'll see.
Yeah.
Not much.
You're not going to get out on the roads.
I've done enough traveling here in the last few weeks. I'm going to stick it close to home.
Tom just got back from Hawaii.
Yeah, so I can't really complain about the fact that I got in my bed at 2 a.m. today or whatever it was, so that's not fair.
You only have to struggle through the next 2 hours.
I know.
And then you can go.
No, because we got to finish the cookies today, and we got to take those to the neighbors tomorrow, so there's a few things to be done. But
so you can rest your head for your long winter's nap.
There you go. I am looking forward to that.
Twas the night before Christmas and all through the house. Anyway, so give us a call at 855-935-TALK, 855-935-8255. It is particularly critical that you call us before you do something stupid with your investments, because the tendency will be to react emotionally. I'm in a very poetic mood today.
And by the way, you made a good point last week. Not just that, but the fact that this is a good place to get a second opinion about things. I love that. I mean, you're right, because a lot of people just say, well, I'll go do that because this guy said to do it. And we can give you a second opinion and tell you, I think you had one last week where the advice was just horrible. I'm trying to remember what the caller. You had so many calls last week.
Well, over the years we've had so many calls where the advice people got was so horrible, and that's why. I'm of the opinion that there is good advice out there. I'm not saying there isn't. I'm just saying that it's too easy for it to be bad, and it's too lucrative
for selfish
it to be bad.
Reasons.
For very selfish reasons.
We'll explain that next hour too. By the way,
my gosh, if we got a story for you on that in the next hour, So we got a lot coming up. Give us a call 855-935-TALK.
Tom and Don are talking real money.
You've heard that about 99% of all financial advisors are not always required to act in your best interest. You've probably been pitched financial products by all manner of friends and relatives, and the investing you have done is probably a hodgepodge of ill-fitting pieces that are doing little to provide the financial security you need. If you're looking for a 100% pure fiduciary, and we'll put that in writing, low-cost, fee-only advisor who always puts you first, give Vestory a call at 800-386-3004. That's 800-386-3004, or visit us online at Vestory, VESTORY.com.
For your real life and real future, Tom and Don are talking real money.
And Tom's making a figgy pudding, so let's all go to his house.
I haven't had that in
a long
time.
What is a figgy pudding?
It's kind of a fruit thing. You put fruit in it and stuff. I don't know. It didn't look that great to me, but I thought, what the heck? So I'll try it.
Under the tree, my brother-in-law sent us, guess what he sent us for Christmas?
Turducken.
No,
I got a turducken.
A fruit
One
cake.
of the 9 that's still rotating the globe
around the planet. Every once in a while, Elon Musk sends it up, and it re-enters the Earth, and
then it goes in his tunnel under L.A. and there it is. So.
855-935-TALK is our number. We're making light of the days, the period, because to do otherwise, if we just talk about what actually went on last week, we'd all be in tears as investors, because what happened to the stock market over the past couple of weeks, particularly last week, is scary.
Yeah, when Amazon, Netflix, and Facebook are down 5% in one day, that's the Dow Jones Industrial Average slumping almost 2%. The NASDAQ now down 20% from its high. That means it's a
bear market.
I know. I know. I was thinking
the Russell 2000's also in a bear.
Yeah. The smaller stock. So, it's a tough time for
investors. So what
investors.
does that mean?
It doesn't really mean much. This is the part. This is the thing. So, number one, and my advice is you got to figure out a way to ignore this. But if you cannot, here's my number 2 piece of advice, which I love. I stole this from, I think it was Jason's
it's your
wife.
Advice.
I know, from Jason's wife. Because Jason says, when you feel so great about investing because the market's up, blah, 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 you should write down and say for yourself how you feel emotionally. So right now, if you feel beaten down by all this, you should write down and put it away so that when you feel elation, you can say, remember how bad I felt before? So you understand your emotions around all this, because we have a tendency to forget. It's often happens.
And the other thing that I would suggest is that if you feel like your portfolio is just behaving far too badly for your comfort level, then you have the wrong portfolio. You've done it wrong. If you feel uncomfortable with this market going down, then you have not built a portfolio for your risk tolerance, and you darn well better go figure out what that is. Go take our risk quiz at TalkingRealMoney.com.
By the way, you may use present tense there. We're always going to try to use past tense with the market. And that does bring me to number 3, which is, again, most people don't pay attention to this. How much money do you need to make on your money?
Oh, good point.
Just
how much risk do you need to take?
Right. How you're not going to be richer than Jeff Bezos, even though Amazon went down by 5% one day. So give him that, and then figure out what rate of return you need to sustain yourself and your family through your retirement. That's the number you should know.
Actually, his stock went down about 1/3 from its high, though.
So is he still the richest guy in the world then?
I don't know. Could be Carlos Slim again. I just love saying Carlos Slim.
Yeah, it's a lot more fun. So anyway, you got to. These are times that are trying, and you have to learn to put it in perspective. You have to learn to make have a discipline about it all. And the emotional part, I would make a note of it so I understand myself better about all this. And I love your idea of the risk quiz, because that's free and it's easy.
You don't know what your risk tolerance is.
Exactly.
You better figure it out, and you better build a portfolio. I heard from people who have balanced portfolios, and they go, my balanced portfolio is down by 6-7%, and I'm going, how much risk were you comfortable taking? If it wasn't 20 to 30%, you shouldn't even be in a balanced portfolio.
Yeah, the 60-40 this year, 60% in stocks, 40% in bonds, is down a little over 9% year to date. So it's not horrendous, but
and
that's a loss.
That is the worst case scenario in history for a 60-40 portfolio has been a loss of about 30%.
Yeah, and by the way, you raised a great point on Friday right here on Como. That is, if Nordstrom was announcing a 20% off sale right now prior to the holiday
on everything,
you'd be running down there really quick. But you have this opposite feeling about stocks. Like, stocks are down, I got to get out of them. No, I can hardly wait to make my 401k contribution early next year. Boom.
This is the best time. And if you're young, oh my gosh, if you're young, you should be cheering every downturn in the market if you're in your 30s or 20s or 40s. You should be going like, whoa, go down some more.
Give me more of that. Yeah, exactly.
855-935-TALK is our number. Let's go to the phones. Pete, you're on Talking Real Money.
Hi, Pete.
Hey, guys. How you doing?
We are well. How can we help you today?
So I'm a 30-plus year employee at Boeing. What will you guys do in terms of investing in Boeing right now? Went from about 370, now it's down to 304.
Well, I'll tell you what I would do. I wouldn't
want to
invest.
answer that?
I would not invest in Boeing as an individual company. We do own Boeing as part of a portfolio of 13,000 companies.
Don't own individual stocks.
Especially if I'm working there, because I'm already relying on that company for my livelihood. And now I'm saying I'm going to throw my future in on it, too. I just wouldn't do it.
All right. So I've actually been out of it for about a year.
Because, I mean, I know it was the best performing stock, I think, for the Dow. Was it a year ago? It had a tremendous run.
But here's the thing, Pete. It's a bargain right now, but so is the market. So is just the broader global market. The broader global market is down about 17%. Actually, it's 19, the All Country World Index. I just looked it up. Yep. So the whole market is down, which gives you a higher degree of overall safety than owning a Boeing, despite the fact that Boeing is the preeminent manufacturer of aircraft in the world. GM was the preeminent manufacturer of cars at one point, and they went bankrupt.
And GE was the preeminent manufacturer of engines and all
everything,
kinds of
and they're in trouble.
Yeah. So no, we don't recommend, nor do we use for our clients, individual equities.
Great. Thanks for the info.
You're welcome.
Thanks, Pete.
Happy
Appreciate
holidays.
the call.
Yeah, great call.
Diversify.
Oh, by the way, diversify. I got to give you this.
What? Is it a Christmas present?
Yeah, it was. It came in the mail today. I checked my mail. And from one of our clients who wrote, this is the client talking to me. It's really a great cartoon that says,
this is a visual.
I have a diversified retirement portfolio. Now listen carefully. 25% down the drain, 40% out the window, 35% gone with the wind. That was pretty creative. I love that.
Yeah, actually, but that's only appropriate if your advisor is one of these guys who sold these real estate partnerships that turned out to be a Ponzi scheme.
Which will take
And boy, you remember, I don't know if you all remember, but if you don't, you can go back and listen to the podcast. Several months ago, we had Jordan Goodman on the show to talk about an investment that he flogged on all his little radio interviews. And he, on our show, the only time he ever said it anywhere, he said it on our show and on the podcast, if this turns out to be a Ponzi scheme, I'll give everybody their money back.
And it's going to be surprising to you, which we'll talk about next hour, how much money he got. A lot of money.
I mean, I was thinking, Jordan, maybe you made $100,000.
I was thinking 200, actually.
This.
Yeah,
okay.
Quite a bit more than that.
Not even close.
Yeah. You had to wait for the
SEC
to
We're in the wrong line of work.
Well, we're in the right line of work, the wrong part of it.
Well, we're in the wrong part of the line of work,
exactly.
And because we'll never make that. We won't make that kind of money our whole time working.
I know. It's a lot of money.
855-935-TALK's the number. Give us a call.
Tom and Don are talking real money.
I just recently created a new and massively improved interactive edition of Financial Physics on iBooks, but I don't want to leave out those without an Apple device, although no other platform offers their interactivity. I have, however, created a free static PDF version of Financial Physics with an F that you can get right now at talkingrealmoney.com. That's talkingrealmoney.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Kind of a depressing week, kind of a depressing year so far for stocks. So if you want to discuss it, give us a call. Yeah. Or if you just want to cheer yourself up, I put up some great Christmas stories at litreading.com. LITREADING.com. In fact, I just put up 'Twas the Night Before Christmas.
And the timing couldn't be a whole lot better for that.
No. So go check it out. Lit reading. That's my hobby. All right, let's go back to the phones. Matt, you're up. Welcome to Talking Real Money.
Hey, Matt.
It's very quiet.
Matt, are you there? Are we going to just bypass? Or is this Tim?
This should be Tim. This should be Matt.
This should be Matt, I'm told, but Matt, we're not hearing you. We'll go. We'll put you
then
back
we'll go
on
to
hold.
Tim.
We'll go to Tim. Try that. Tim, are you
welcome
there?
to Talking Real Money.
Hey, there you are. How you doing?
Yes, this is Matt Tim.
This is Matt Tim. How are
Matt Tim.
Matthew Timothy? I like that. That's nice name. Sure.
Very biblical.
Exactly.
Well,
exactly.
yeah. You'd be surprised who I was named after, but that's beside the point.
Leave it at that.
Timothy
okay.
O'Leary.
Here's no, not that one.
How can
the
we
deal is,
Mm-hmm.
I'm not sure that I listen to you guys all the time.
Thank
but
you.
You're talking about investments and portfolios, and I have neither, and I'm close to retirement, and I have about $85,000 to my name. So
You're pretty average.
Actually, you're above average. I mean, the 56% of Americans have less than $10,000 to their name. So,
okay, well, that makes me feel way better, but not only just barely better.
okay. Well, how old are you, Tim?
I'll be 61 in January.
61. And how many more years are you going to work?
Apparently forever.
Well, I don't know about
good.
that. I mean, that's...
Well, no, but that's his. I see what he's saying. I don't have enough money. Tim, what's the question?
Well, my question is, do I have enough money to actually, create a portfolio or do something that's not going to lose what little money I have?
Yeah, you should. Yes, refer to Don's previous statement about having a balanced portfolio. Should you take it all and put it in Boeing? No. Should you take it all and put it in stocks? Probably not, but I do think you should consider, I have no idea what your occupation is, but consider working to age 70, because at 70, your Social Security benefit is going to be far larger than it would be even at full retirement age. So that would be one thing. And yes, you should take the $85,000. Is this in a pre-tax, like an IRA or 401k, or a post-tax Roth or regular taxable account? How's it held?
Negative. That is only held. Most of it's in a money market account, and the rest is in a savings account.
Okay.
Then I would suggest, Tim, that you, again, go to talkingrealmoney.com. Take the risk quiz so you understand your tolerance for risk. Then I would suggest you go to Vanguard and you build a portfolio that is split up based on your risk tolerance between the Vanguard Total World Stock Index Fund.
That is VTWSX.
And probably the Vanguard Bond
Total
Index
Bond
Fund.
Yeah, you're going to balance between those two.
I'm sorry, you guys seem to be talking over each other.
Oh, okay. Well, I'll give you the ticker. VTWSX, Vanguard Total World Stock Index Fund. It's one mutual fund that holds 8,800 stocks around the world and does it very inexpensively. That would be the portion of of your money that you want to put in something riskier than the money market. Then the other part would be in the Vanguard Total Bond Fund. Don, do you have the ticker for that one?
No.
You type in Vanguard Total Bond Fund, and you get the ticker. I would simply balance between those. Go ahead, Don.
And then one last thing. if you can squeeze $500 a month out of your budget, fund a Roth IRA in those same exact funds every single year, or $500 a month, and you'd have about $200,000 at age 70.
Tom and Don are talking real money.
Just as there are basic laws that govern our physical world called physics with a PH, there are also basic rules and concepts that impact our finances and investments. I call them financial physics with an F. In fact, 8 years ago, I wrote a book about them. For years, I've wanted to create an interactive version of that book to help readers better understand the concepts. So, since it was time for an update, I turned financial physics with an F into a special interactive multimedia version only on iBooks. It's the only platform that allows that. Because I want everyone to have access to this information, I decided to give this version away. Yes, it's totally free. So if you have a compatible Apple device, go get your copy of the new interactive book, Financial Physics, on iBooks. It's totally free, and it's available right now in the iBooks store.
Reality radio for a really great future. We're talking real money.
Once again, our phone number is 855-935-TALK, 855-935-8255. And because we are ruled by the clock here, we had to run into a break there at the bottom of the hour. I just want to back up a little bit for Tim's sake and just explain a couple of quick things. He said he had $85,000 in a money market. If he really wants to retire at 70, we talked about putting it into a two-fund portfolio. If it's about a 50-50 mix, an average annual return over the 9 years he has is probably 5% is about reasonable. That's historically conservative. If he invested that $85,000 and then funded a Roth IRA to the tune of $500 a month, which he can do at his age, then he would, at 5%, have somewhere around $200,000 when he got to age 70.
And you could use the $200,000 to withdraw about $8,000 a year out of that safely to have it last for a while. You add that to the Social Security you're going to get. That helps you have a pretty decent retirement.
Well, yeah, I mean, and it probably puts him at about an income of, roughly, it depends on what his Social Security is, probably about $3,000 a month, maybe $3,500 a month.
Right, exactly. So there's no reason to ever despair when you're 61. You say, I don't have enough money. That's okay. It's never too late to start. And by the way, I think for a lot of people that are listening, I hate to say this because I hate to tell them, and I just came to this realization over the holiday that I just had. You may have to work longer than you think you're going to have to work. That's sometimes the reality.
You may actually want to work longer.
I like my work. I mean, so it doesn't mean it's not painful in any way, but for others it may well be. So I understand that.
And I have one other little bright point to add.
Oh, because you're Mr. Jolly today.
I am. And by the way, it's Timothy Leary. I have a friend who's Timothy O'Leary. Timothy Leary was the LSD guy.
Yes, he was. Tune in, turn out, drop out, whatever.
Tim. If you do it soon, you're putting that $85,000 into a stock market that's on sale 20% off.
That is an absolutely great piece of advice. Yeah, terrific.
You know how many people we have call us and go, I've got $250,000 sitting in a money market. I'm wondering when to get in. Now.
Yeah. Well, there never really is a
would
right
be the time.
Right. I mean, there never.
No, but is it better now?
Sure. Absolutely. Than it was in August? Absolutely. Yeah.
Now's the right time to me. I don't know. 855-935-8255 is our telephone number, and Eric is next on the show. Hi, Eric. Welcome to Talking Real Money.
Hello.
Hello.
I have a question. I'm about 10 years from retirement, and I want to put some money. I have a backdoor Roth going, an HSA with about $40,000 in it, and I want to put in money and just kind of forget about it. And I've thought about index-based life strategy funds or index target date funds, and wanted to know your opinion about those compared to just putting in, a total market and a bond fund.
I'm going to start. I'll let Don finish. So the reality is, when you own any of the aforementioned products, the Vanguard Total World Stock Index or a Vanguard Target Date Fund, you end up owning mostly large U.S. stocks because of the way the funds are built. That's just that it's very hard to operate those humongous index funds without having a huge tilt of the money. And I think it ends up being like 80% in large U.S. stocks. You get a little bit of small, you get some international. You don't get as diversified as we would like you to see. That said, if truly your goal, Eric, is to just put the money there, I don't have to worry about it for 10 years, I would either use the approach we just mentioned or the Vanguard Target Date funds, I think, are very fine funds as well. Don?
Yeah, but again, it comes down to what is, one, the purpose for the money, and two, your ability to ignore volatility. If your ability to ignore volatility is high, then you could do something like the Vanguard Total World Stock Index Fund, or you could even get a little crazier if you wanted to do a little bit more work and build a portfolio using some of Vanguard's tax-managed portfolios, if you're in a high bracket, or build your own that has a little bit of bonds and a little bit of global stocks and some small cap in it to be more aggressive. You know, there's some really interesting things you could do, but I would lean toward that World Fund.
And you could, going back to your situation, you could take the Roth and put that in the riskier assets like a small Vanguard small cap fund, and then take the HSA money and put that in the Vanguard Balanced Index. Again, I think that
then
gets you to where you want to be there. Yeah.
Yeah. Good luck. Your options are all good.
Tom and Don are talking real money.
Keeping the podcast breaks as painless as possible is my goal. That's why I want to very quickly tell you about the only magazine I've ever heard of that is 100% real investing all the time. There's no business news, no speculative advice, and certainly no lifestyle stuff. It's called Real Investing Journal. I publish it every quarter, and you can get 2 full years for only $25 at realinvestingjournal.com. That's realinvestingjournal.com.
For your real life and real future, Tom and Don are talking real money.
We're trying to save your future. That really is what this show's all about. If you make huge mistakes when it comes to investing now, your future can be in jeopardy. So you need to make really great decisions. And a second opinion, if you were going to be operated on, you'd be foolish not to get a second opinion. And yet, when it comes to our wealth, our future, we just, we go to the guy who sat next to us in the church pew or some woman from the club and let them do whatever they want. And what they often do is not good for you. So give us a call, 855-935-TALK, 855-935-8255. And to make it doubly valuable, we're going to send you a free copy of Financial Physics as our gift. Includes shipping and handling. You don't pay anything. We just send you the book if you call and ask something or comment on something on the show at 855-935-8255.
And if you're feeling bad about the fact that your balanced portfolio this year has lost about 9% if you own the right type of bonds. By the way, I do read a lot about, there's a lot of chatter about bonds are going to be down and stocks are going to be down. I just looked at the intermediate bond fund we use for our clients. It's lost a little over 1%. I mean, that's not a big deal. That's not a huge loss, but it's down, right? And people think stocks lost money, bonds should be up. Nope, that's not always how it works.
Not the way it works.
But people believe that. So if you're feeling bad about losing, 10% or so, maybe you shouldn't, because you should consider the people that about a year ago were telling us, you guys are really old-fashioned. You really don't understand investing. You got to understand that Bitcoin is going to make you rich. It's going to be what was the Lamborghini when it came to Bitcoin?
Oh yeah, the people who are they're going for a Lambo. They're going for a Lambo. Have you gotten to your Lambo yet?
Exactly.
That means big enough profit to buy a Lamborghini.
Yeah, you're going to make some very easy money on Bitcoin. And right now, if you're a Bitcoin miner, going out and mining, I guess, costs about $4,500 a Bitcoin to mine.
In the energy that you use?
In the energy that you use. And Bitcoin today is trading at about 3,300.
No.
I had that number wrong. That's what I thought I read today.
Oh, no, it was. It was a while ago, but now it's back up to almost 4,000.
Oh, pardon me. So
that's how bloody volatile this thing is.
Okay. So, but if you're feeling, because a year ago, what was it? 20?
19,200 approximately. It's funny. I've read a lot of the press. They're going, whoa, it was 14,000 a year ago. No, it was 19,000 a year ago.
Time. Yeah, right.
Yeah, so come on. And this week it's just soared. It went up from 3,500 to 4,000, but since last year, a year ago, it's down about 75%.
But you tried
They
to
don't
find,
even have a name for that kind of market.
You tried to find a comparison, which I think is brilliant, because we've always tried to say you can kind of say it's like gold, because it really just does depend on what one person believes it's worth. There really is no intrinsic value per se. But you found something else that maybe people could give for Christmas that is very similar. I mean, I think this is really smart, and that is air from Wrigley Field
air.
when the Cubs won the title a couple of years ago. You can actually buy a bag of air that somebody, I guess they took a bag and they got the air right out of Wrigley Field and in 2016, and you can invest. I forget how much it was for the bag.
It was $11 in 2016,
not including
but
shipping and handling.
I figured today you might be able to get that bag for $2.50.
Oh, it's come down that much.
Well, think about it. Really?
I don't know. Anyway,
people are selling air
enthusiasm.
from a concert online. Oh, I went to see Kanye and I captured the air in the concert. Will you give me $1,100 for the air from Kanye's concert?
I think so. I don't. Unless you're really close to him or something. So
can I smell his breath
exactly
in the bag? Then no.
I think the comparison is absolutely spot on, though, because it is complete and utter speculation. We're not saying, and by the way, you can call us. We'll be happy to argue with you about this. 855-935-8255.
They won't call because they know we'll win.
Oh, I know. So that would be one thing on the no list. It was on the no list a year ago when we were getting all the calls about it. It's still on the naughty list for this holiday season.
What? Come on. Do you know what a bit? Do you even really? Come on. Honestly, unless you're like super geekdom, do you really even know what a Bitcoin or an Ether or an Ethereum or a whatever coins? Would you know what those are?
No.
Do you really know what they are? And what can you do with them? This is forget about the fact that they've suffered the biggest decline of almost any financial asset, in quotes, in history. In history, the stock market has never gone down anywhere near this much in a single year.
Yeah, right. That makes sense.
Never.
Yeah.
Never happened. What's it worth? What is it? What are you going to do with it?
I know we're going to get the email again from the guy who's going to tell us you can now actually use Bitcoin to pay some government fee somewhere.
Ohio
That was it,
state taxes.
That was it, yeah. So
yeah, what are 12 people going to do that?
And there's a pizza place somewhere in New York that takes it too.
Does your wife's pizza place take it?
She does not take it. Not the best
How
of my
would
knowledge.
you take it?
That's
the other thing. I don't even know. Do you have a terminal? You just
swipe the Bitcoin.
And then if you don't forget your 43,000 digit PIN number, you can't get to your Bitcoin.
Exactly.
Or if you throw it in the trash like that one guy did.
Yeah, exactly.
He had all these Bitcoin and it got knocked off his desk into the trash, ended up in the landfill. He was paying people to dig through the landfill to try to find it because it was like $1 million in Bitcoin last year. It's okay, guy. Yeah, it's okay, guy. It's not worth as much now. Let it go.
Don't pile through the trash for it today. You're all right.
Yeah.
So that's not on the list for things to invest in 2019. It was not on the list for things to invest in 2018 or 2017 or 2016 either, by the way. So we're not piling on, but
it's not a thing. Stop it. Just stop. Do you think the stock market is scary? Yeah, and that was the thing. I got a lot of notes from people going, Bitcoin is safer than the stock market. Really? How'd that work out for you?
Exactly.
Uh-huh. Yes, I know the stock market is scary, but that's the other thing that we need. The point we need to absolutely drive into your brain. The stock market is only as scary as you let it be. Yes, if you have 100% of your money in a few NASDAQ stocks, Apple, Amazon, Microsoft, you lost a third of your money. But that was dumb. You let it be that risky. If you have 100% of your money in the total market index, you better have gone in knowing that you could lose half your money in a bad market.
And by the way, technology, because it ran way up and is now in bear territory, is another place you can lose money very quickly. I mean, because some days these companies, especially the FANGs, look tremendously great. Some days they don't look as great. And you can pay a big price for limiting. By the way, the number of you who work at Boeing who have been in the Science and Technology Fund that I've tried to talk out of over the last 20 years is big, because everybody thinks that's where the real money is going to be made in the future. It's volatile. There's not a great long track record. Remember, the NASDAQ lost, what was it, 70% of its value in the early 2000s?
Yeah.
It was some
It got
tremendously downturn.
It got killed.
So it's a limited sector bet. It is.
And here's the other thing. What you don't know more than the experts, whoever they are, on Wall Street. You cannot beat them at their game. There are a few of them who lie, cheat, steal, will outrace you to the finish line, who will beat you up. You do not know more than they know. Quit playing with the big boys.
And 90% of the trades now are made by those people that spend hundreds of millions of dollars a year researching all those companies to find the inefficiencies, and they can't do it in the long term.
Yeah, and they're doing it for a fraction of a point. You can't afford to, because the commissions would eat you alive.
Tom and Don are talking real money.
Your number one financial goal must be retirement. As we live longer, our need for a substantial retirement nest egg has grown. That's why you must have a plan. And to help you map your route to a brighter future, I created Vestory's Better Retirement Guidebook. And you can get a free PDF copy right now at retirebetterbook.com. It's truly free, and there is no obligation. So get your Better Retirement Guidebook now at retirebetterbook.com. retirebetterbook.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And if you want to give somebody a really awesome last-minute Christmas gift, why not give them a better future, a better retirement? Our big event for the year, and this is our 5th annual Retire Meet coming up in February, is going to sell out again. So go get those discount pre-sale tickets right now and give them to somebody who might really need a good retirement at TalkingRealMoney.com, TalkingRealMoney.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately and consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?